So you've got some money and you want to know where and how to invest it safely. This is a really popular concern right now, considering the number of uncertainties in the economy today. We continue to hear the word recession. We're seeing more than normal volatility in the stock market. The crypto market completely is tanked. Interest rates are on their way up. Who knows when they'll stop? And inflation is at its highest point in 40 years. And we're all seeing a wide array of predictions with regard to the real estate market. So what is an investor to do? A client of mine recently asked, I've got $100,000 to deploy. What's the best way to maximize it? And I had some ideas for him to safely invest in a seemingly risky environment. And he replied with, I wasn't expecting that. So I'll let you in on what I said. You ready? Let's go. Hi, I'm Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. And most people get this wrong. And that's why clients come to me. And even though they have decent, sometimes great jobs, they tell me they are frustrated with either the line of work that they chose or they're just tired of the rat race. And they tell me that they feel that they wish they would have started investing in real estate much sooner. And if that sounds familiar to you, you're not alone. How could you not have that regret, especially when you have a good paying job, but you feel you might not have had enough money or resources to make a real dent in your day job escape plan? And I tell them one thing that always works is to invest a little time in learning how creative real estate investing works. Because investing in real estate with the intent to retire early, or at least create the option to, it's not as money intensive as most people think when they see what's actually possible using more of your intellectual currency instead of your actual currency. And this reminds me of a recent client of mine, Spencer, who just before we met started building his wealth in real estate. And today he holds a few cash flowing income properties and he has $100,000 liquid to invest. And that's really why he became a client, because he wants to learn how to best maximize that $100,000. So what do you think Spencer should do? The answer to most real estate investing questions is it depends. Because the most important detail of this scenario is that Spencer is currently in the wealth building phase of his real estate investing career. See, in the building phase, you want to get control of as much real estate as possible and responsibly leverage as much as you can by using other people's money. And when I say other people's money, that can mean banks, of course. It can mean hard money. It can mean private money. It could be credit cards. It could be the existing financing on a property or seller financing. Whatever money that's not coming out of your pocket. That's what I'm talking about. You see, just because you have money doesn't mean you have to use it to acquire property. Instead of Spencer using his $100,000 to buy more property, I suggested that he probably hold on to the majority of that and use it to manage and maintain the properties that he does acquire. So if you're not going to dip into your own disposable cash, whose money are you going to use? Well, I've got some ideas for you. 6 of them, actually. Number 1, right now, the cheapest money available today will be through the banks. Despite the recent increase in rates, it is still pretty tough to beat the low rates they're currently offering. And I'd take as much of their money as they'd give me, and I'd take it right away. Now, if banks aren't an option, and even if they are, at some point they will not be, I'd start looking for number 2, seller finance deals. You can find them on Craigslist fairly regularly. You can even find them on Zillow by typing in motivated seller keywords into your search criteria, like seller carryback, or owner will finance, or seller finance, phrases like that. Most of my clients are surprised by how frequently they're available. Or ask realtors. Every realtor that you come in contact with, this is the question I always ask. You ask them this. Do you know of any listings where the seller is willing to carry back financing? That's been the most productive, valuable question that I've asked realtors over the years than anything else. Now, another place to look for money is number 3, your friends, your family, your associates, your network, who are dissatisfied with the current returns on their investments. Meaning, don't you think Aunt Sally, who's earning 0.7% in her CD, would be very interested in an 8% return, or even a 6 or 4% for that matter? That's secured by a tangible asset? Yeah, most likely. Even at 2%, it's more than doubled what she's currently earning. And let's not forget number 4, your own assets as a means of money. I mean, do you have any assets that are underperforming? Do you have an old 401k that you forgot about, or an old IRA? How about some gold or silver lying around? Maybe you have a couple jet skis in the garage that don't get used anymore, not very often. Anything that you have of value that's no longer serving you or not serving you as well as it should, utilize that. That's a good place to look. I mean, you can always buy it all back later if you want from your real estate proceeds. And by the way, if you'd like to go deeper into using other people's money to build your real estate portfolio, I'm getting together next week with a small group of investors over Zoom to walk them through a full day of creative financing strategies and techniques. You can get the details at creativefinancingmasterclass.com. Number 5, always be negotiating. You know, your negotiating skill has actual monetary value. People really undervalue this. They underestimate it, meaning you can turn your intellectual currency into actual currency, actual money. For example, if you ask a seller a very simple question like this, what's your bottom line? And they respond back with $10,000 less than what they originally asked for, that's $10,000 you don't have to find. Or perhaps a combination of any of the things that I've mentioned. And that brings me to number 6, creative financing. And this is where real estate really gets fun. You know, let's say, for example, Spencer goes out and he finds a single family home with an owner who's willing to sell or finance 60%. Well, if he negotiates that up to 70%, then he sells the jet skis for an additional 10% of that purchase. And then Aunt Sally decides to step in and finance the remaining 20%. Spencer's now got 100% financing and control of another cash flowing property in this portfolio, doesn't he? Yes, and he still has his $100,000 in the bank, right? You know, maybe he uses a couple $100,000 of that to improve the place a bit and then puts, I don't know, another $3,000 or so into a separate bank account for incidentals. Now Spencer is out of pocket, just say $5,000, and he's sleeping very well at night knowing that everything is taken care of and he's got ownership of another cash flowing property. Then tomorrow he can get up and go do it all over again. And after a mere, 10 repetitions of this, Spencer can, or is really close to, stepping away from that day job that's got him so down. You know, when it comes to investing in real estate, people get stopped because they think they have a money problem. But in reality, all they have is an idea problem. And if you'd like more of these creative ideas that we've been discussing and others like, subject to financing, options, wraparound mortgages, equity sharing, moratoriums, deferrals, de-escalating interest. I mean, the list is seemingly endless. You'll probably really like what we're going to be doing next week at creativefinancingmasterclass.com. So take a look. If you like what you see, join us. Now back to Spencer. The main point here with him is, if you're building your wealth, you want to get your hands on as much property as possible, using as little of your own money as possible, and keep a good chunk of cash in the bank to back up the properties that you do acquire. I mean, you'll rest easy knowing that your assets are covered and protected, and you can continue to build your wealth until it's time for phase 2. And that would be the preservation of the wealth that you've created, of which I'll cover here on the channel soon. So if you'd like to join us next week for a full day's worth of creative financing strategies and techniques, head over to creativefinancingmasterclass.com. So what did you find most impactful? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you're already subscribed, I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Take care.